Would you like to know how to trade gold and silver successfully? Well, I'll tell you exactly how I do it and what I focus on to produce the kind of results you see here. For me, it all comes down to one idea. I treat price as if it were an aircraft moving through an invisible atmosphere. It's all about the numbers. The way I see it, trading is less about guesswork and more about reading metaphorical flight instruments that tell you whether you're climbing, descending, or cruising smoothly. You see, just as a pilot constantly checks altitude, airspeed, and glides slope to stay on course, I monitor price behavior using moving averages, price channels, and rate of change, what I call my AeroPrice dynamics system. It's built on the same logic that governs flight. Structure, slope, and momentum must all align for a stable trajectory. Now, in his classic book Stock Market Logic, Norm Fosbach says there are no magic numbers in trend following. He argues that while certain moving averages worked well in the past, there isn't a single best value that always wins. But I couldn't disagree more. My trading success comes precisely from rejecting that notion. For me, certain numbers, specific timeframes, and deviations are absolutely critical. They're not arbitrary. They're calibrated through historical data, just like a pilot's instruments must be tuned precisely for accurate readings. When I trade gold and silver, I use moving averages in a very different way. I don't define them in standard periods like a 50-period simple moving average or an 8-period exponential moving average. Instead, I treat them as temporal references based on minutes and hours, benchmarks that reflect the immediate conditions of the market. Let me break this down. For gold and silver, two key measures anchor my directional outlook: the 3-hour and the 11-hour baselines. Together, they define the intraday bias, the overall direction of the market's flight path. Gold tends to stay within a relatively narrow altitude range, usually about 1% from its 11-hour channel, while silver has a lot more freedom to roam, sometimes stretching as far as 3% without losing its trend. If price moves outside these limits and holds there, that's like an aircraft veering off course. It signals that a change in direction may be imminent. The 3-hour measure acts as my short-term reference, showing what traders are doing within the current session. If both the 3-hour and 11-hour lines are sloping upward, I only look for buying opportunities. If both are tilted downward, I stay focused on short positions. When they disagree, I do nothing. I sit on my hands. Mixing signals is like trying to fly through conflicting weather reports or air turbulence. It's better to wait for clarity. Now, here's where the real profit engine comes in: the 40-minute price flow channel. For silver, it's set at a 0.2% deviation. For gold, 0.1%. If that 40-minute line is sloping up and the 17-minute price flow channel, set at 0.45% deviation, is holding above it, the market environment supports long trades. If all three, the 180, 40, and 17-minute channels slope down, that setup supports shorts. I exit trades as soon as the 17-minute channel crosses against the 40-minute one. That's my version of leveling off or changing altitude when flight conditions shift. It might sound technical, but in essence, it's nothing more than watching whether my engines, wings, and flight path are aligned. When structure, slope, and momentum all agree, the market's movement becomes predictable and repeatable, just like a 787 lifting off the runway at a fixed angle of ascent. These are my magic numbers, refined through rigorous testing. As you can see from my track record, this approach has produced an almost 100% daily success rate that speaks for itself. And while some might argue that recent uptrends make trading easy, the truth is this system performs in both bull and bear markets, which is why you also see a couple of short positions in the bunch, because it's based on physics, time, and coherence instead of emotion or opinion. So in summary, if you want to trade gold and silver successfully, you need a system that's disciplined, data-driven, and consistent with how markets actually move. Think like a pilot. Trust your instruments, know your altitudes, and align all your indicators before taking off on a trade. When the sky is clear, when structure, slope, and momentum all agree, then and only then is it time to fly. That's how I do it. And that's how you can too. one stable, well-measured trade at a time.